Here with this week's hottest stories in the investment world, this is Zach's Friday Finish Line.
Hello and welcome to the Zach's Friday Finish Line. I am Ryan McQueeney, a content writer here at Zach's, along with one of our editors, Maddy Johnson.
Hello, today is Friday, November 17th, and we're here to recap this week's biggest stories in the investment and financial world. So we're always tuned into the latest news, as our regular listeners know. In the retail world, one of my favorite sectors, as one would expect, we'll be talking about the latest earnings results from one of the world's biggest behemoths, Walmart, later in the show.
Yeah, and also on the retail side, we'll be getting into a kind of lackluster earnings report from a major sporting goods retailer, but trying to pin down some reasons why at least one analyst still thinks it will be a long-term survivor in this struggling retail sector.
But at first, we have a headline from the booming world of Bitcoin and cryptocurrencies.
Yeah, so shares of Square Inc., everyone's favorite payments company. Well, I don't know about that. But
I think that's Venmo.
Yeah, true.
And PayPal.
Yeah, I was going to say that I can't just cast that really blanket statement out there.
It is. I think Square is the most aesthetically pleasing.
The logo
company.
is cool, the coolest, and the white design.
The products.
Yeah, I agree that it looks the coolest. But yeah, so a payment company we have all heard of. How about that? Shares of Square Inc. gained on Wednesday after the payments company announced that it is testing support for Bitcoin through its mobile application Cash App, a Venmo competitor.
Yeah, I have it on my phone. I've used it once because I didn't have Venmo. And my friend is like, what? Why don't you have
Get
Venmo?
with the program.
Get with the program. So they're like, just download this thing called Cash App. And I'm like, okay, cool. Let me do that. It's very nice. It's a very good app.
Well, they are now testing the ability to buy and sell Bitcoin on Cash App. Spokesperson said to CNBC, quote, "We're exploring how Square can make this experience faster and easier and have rolled out this feature to a small number of Cash App customers. We believe cryptocurrency can greatly impact the ability of individuals to participate in the global financial system, and we're excited to learn more here." End quote. So, according to, just give a little bit more background on kind of the idea of, or the ability of people have right now to buy and sell Bitcoin on the internet. According to analysis by Altana Digital Currency Fund, and this was cited by the original CNBC report that broke the news that Square was doing this test, Coinbase, which is the largest U.S. Bitcoin trading outlet, has witnessed its user base double to 12.5 million since January. Certainly not going to necessarily challenge Coinbase for that throne anytime soon, but a kind of a new way that people with an app they're already familiar with could buy and sell Bitcoin. And also, just as a quick reminder, we should note again that it is only a few Cash App customers right now who have the ability, and we kind of don't really know for sure when Square management is thinking about rolling this out to everyone using the app. Some quick reactions to it. Some analysts were really favorable on this news, really bullish on Square's announcement. Credit Suisse analysts said, quote, "We believe it could place Square in an early mover position as a mainstream fintech company providing cryptocurrency services." I think that's a really important quote to highlight because they really are this mainstream. I said everyone's favorite payments company. Maybe that's not true, but certainly a mainstream fintech company. And the fact that one with such a recognizable name and brand recognition would kind of co-sign on the popularity of Bitcoin right now, it seems to really add even more legitimacy to the cryptocurrency market. However, Some analysts were hesitant to declare Square's Bitcoin test a major moment for cryptocurrency transactions. Nomura Institute analyst Dan Dolev said, and again to cite CNBC, quote, "It's nice, but I think the bigger thing is if you can eventually be able to pay with Square point of sale terminals with Bitcoins. It's a nice PR thing, but it's not a fundamental mover and shaker." Certainly a good point. And it will be interesting to see if the next step for Bitcoin and cryptocurrencies is more traditional point of sale transactions. I'm going to add one quick anecdote to this story before we move on. There is a bakery / like bread / shop / like deli in the Lakeview area of Chicago. I'm actually not 100% sure that it's still in business, but at one point it was, and it was one of the first businesses in Chicago to accept Bitcoin at the point of sale. And it also had a really neat it might still exist, has a really neat Bitcoin ATM is what I would call it.
Yeah,
where
I think that's actually what they're technically called.
Okay, so you can literally just insert cash and have it. There's a little bit of a fee, so it's not the cheapest way to buy Bitcoin, but you could insert cash at right there in the store and have it turned into Bitcoin and sent to your Bitcoin wallet. And I did it one time just to kind of like say that I did it, and like this was. At this point, Bitcoin has like quintupled in value since it happened. So,
well, yeah, and I do want to point out, like the price per Bitcoin. So for every one Bitcoin, it's like $7,800, and like the price just in the last month has skyrocketed, and it has like skyrocketed since the summer.
Yeah.
But just in the past month, it is like tripled. I don't even that my math is not right. I'm just exaggerating. But like just in the summer, it was only let me see. It was like only like $3,200 or like less than like $4,000 per one Bitcoin. But
it's been on a crazy
run.
It
has really been on a crazy run
for the better part of 2 years now.
Right.
When I to date this anecdote a little bit. When I was purchasing the Bitcoin on the machine, I didn't even get a full one. Again, it was kind of just to like say that I used the ATM and like be cool. But one full Bitcoin was at like $375, like $375. And I got rid of it like relatively immediately. And I don't know. I regret that decision, obviously.
Well, I mean, who knew? Like, it's very risky. Like, I think someone who like doesn't really know what Bitcoin is, people only think about Bitcoin for buying like illegal black market things, like guns and drugs, and I don't know, like
guns
what else?
And drugs.
What else do you buy? What else can you buy Bitcoin with that isn't on the black market right now? Yeah,
these delicious sandwiches at this cafe.
Okay, but like,
yeah, no, not a ton. Is that?
Yeah,
it's
maybe like the Square app can let you buy more things, but I mean, why it's so risky and why I think a lot of investors and companies aren't behind it is because there's this preconceived notion that it is for like these very specific criminal things.
Yeah. Certainly, there are. Businesses in like restaurants and stuff that accept it. Almost, I feel like this cafe started doing it as like a novelty thing a few years ago, without any sort of concept of where Bitcoin would go in the few years, in just a few years, I should say. But yeah, I mean, you would think that it would add so much legitimacy to cryptocurrencies as an idea to get more and more big fintech companies in saying, okay, Definitely. We're going to incorporate this not just into, this Cash App you can buy and sell on Cash App now, but like we are supporting Bitcoin transactions in our point of sale terminals. That would be a really monumental thing for Bitcoin and all cryptocurrencies. Mm-hmm. But yeah, I would almost say outside of the illicit things that you're mentioning, transactions are really like not even, they don't even, people aren't even really conducting transactions that much. They're just buying Bitcoin as an investment strategy.
Sure.
Which is certainly one way to go about it. But yeah, it'll be interesting. Maybe 20 years from now, at my local mom and pop shop that's still using Square point of sale terminals, we'll be using Bitcoin on a regular, everyday occurrence. It's certainly surprised me thus far, so I'm willing to be surprised by cryptocurrencies even more in the future. Moving on to something we talk about a little bit more on the show, which is the struggles of retail and one potential survivor.
I don't think so. But, yes, it's been an up and down week for Dick's Sporting Goods. It's really been an up and down week for Dick's Sporting Goods all week, all year.
Been an up and down few years.
Just for a long time now. So it's the country's most recognizable sports retailer. And it really kind of took that title, especially when Sports Authority closed down because of bankruptcy. I would think that that would be the most comparable to it as far as brand recognition. Right.
And now that its Sports Authority is gone, I feel like Dick's definitely has that crown.
Yeah.
Just sheer recognition wise.
Now, did they capitalize on that? That's arguable.
Yeah, sure.
But Dick's has definitely struggled in the face of the retail sector's downturn. So they reported decent third quarter fiscal 2017. And both earnings and sales surpassed our estimates. The company posted adjusted earnings of 30 cents per share in the fiscal third quarter. That beat the Zacks estimate of 26 cents, but declined 37.5% from the year-ago quarter.
Yikes.
Net sales of $1.94 billion topped the Zacks consensus estimate of $1.89 billion and grew 7.4% from the prior year quarter.
Not bad.
However, shares slumped on the company's tepid outlook for the upcoming year. Management said it expects the retail environment to be extremely promotional through 2018. Again, that's nothing new.
Yeah.
It's going to be promotional. Every apparel retailer, it's going to run promotions. Yeah. It's how you're going to get customers into the stores. It's how you're going to entice customers to want to not shop online, not want to go to Amazon, especially with a company like Dick's, who a lot of their key products you can find on Amazon, likely at better prices. That's a different story.
Basically everything.
Yeah.
Especially now with like Nike ramping up their direct to Amazon, if you want to call it, sales. Like it's like I can't think of one thing. Canoes, maybe I would have to go in and like get my hands on.
I think we were talking canoes, like golf
shoes, I guess, but like even the shoe specific sports retailers like Foot Locker have struggled. So it's not like we have to go in and try on shoes anymore. Even
and like. If you like, I think you used to be able to, like, I was talking to this with one of our colleagues, like you used to be able to buy, or I don't know if you still can, firearms at Dick's or other sporting goods retailers. I don't know if you can still do that potentially in some locations, but that source of revenue has really decreased.
People aren't buying guns right now.
Guns right now. And you know what? I just don't think there's a lot of hope for them. But I'm starting to go on a little bit of a rampage.
Well, let's see what JP Morgan has to say about it. Right?
And then on top of these price issues and promotional issues, Dick's has struggled with excess inventory in the supply chain. Another common issue for retailers, broadened distribution strategies from some vendors, and a lack of innovation. And novelty could put pressure on margins on top of promotions and promotional discount strategies that also really affects margins. But nevertheless, an analyst from JP Morgan declared the company a quote unquote long-term survivor in the struggling retail sector on Wednesday. So on top of this bold declaration, JP Morgan upgraded DKS to overweight from neutral and raised its price target to $32, which would represent a 20% upside from the stock's opening price on Wednesday. So the JP Morgan analyst said in a note, quote, "We appreciate the company's consistent focus on investing in its stores and the efforts in 2018 to put the customer at the center," unquote. I just don't like, I appreciate like the confidence they have in Dick's. I just don't see how Dick's is any different. I don't see how Dick's stands out from any other retailer.
Yeah.
I think they're even in a worse spot, specifically with sports retailers, because they depend so much on Nike and Under Armour to other sports retailers who are struggling almost as badly, and who are trying to sell their products more and more outside of companies like Dick's.
Yeah, just going straight over the top within their stores, on their own websites. And like you said, directly through Amazon. Yeah. What seems like another big problem with Dick's is that reining in inventory and really like capitalizing or trying to maximize like the in-store experience is a unique challenge for Dick's because of how big the stores are and how many different kind of like...
It's like a mini department store if you think about it.
Yeah, it definitely is. And you have so many different types of products in there that you have to figure out how to display correctly and market to the right people at the right time. It's a big seasonal thing. It's always constantly changing with the seasons and when the sports seasons are coming in and out. I will say, if you look at some more of what JP Morgan said, what these analysts said, it seems like it's a vote of confidence in Dick's management, because those issues that you said that they had brought up in their earnings report, specifically the excess inventory in the supply chain and excess inventory in their stores, that's going to be something that they're working on in the first half of 2018. They said it's trying to clean up the stores a little bit and get rid of some of that excess inventory, which is like a good first step, and maybe shows that shows that management has things maybe pointed in the right direction and the ability for the company to recognize that those issues are going to put even more pressure on them in the upcoming year. It seems that management at least like knows what they're talking about.
Sure. That's really important with retailers, is to have a really good management team.
So that's what I think. I think if anything, JP Morgan is just, they seem confident in the company management, which competent leaders, I mean, are going to be really important for these struggling retailers. You've seen some executives make some questionable decisions. I would bring up Sears as as an example of leadership that maybe has failed over the past few years. Another thing I wanted to mention, we didn't get this in our notes, but in that JP Morgan note, they made an analogy, maybe a metaphor. I don't know the difference between analogy and metaphor, I guess. But they said Dick's Sporting Goods is akin to Best Buy. It's the Best Buy of the sporting goods world.
What?
Because it has they're basically making the argument that it has like the strength and like management and brand recognition to weather the upcoming storm in retail.
They're in the storm.
Right. Definitely in the middle of it, certainly. But we're making the argument that both of those companies should be fine long term, which I thought
Best Buy's going to be fine.
An interesting comparison. Not sure I 100% agree with it, but an interesting comparison nonetheless.
Yeah. Interesting is one way to put it. Yeah. Okay. I will just want one more thing about this quote about putting the customer at the center. That's going to be so important, is you have to focus on the customer and what the customer wants in different regions of the country. And that's really key with retailers, is because especially with department stores, right, is like, if you naturally, or not naturally, but normally cold weather climates, right? You go into a department store and you have like a ton of winter coats. Like the floor space is like dedicated, just like miles long. It feels like you just see winter coats everywhere. That's kind of how it is when you walk into a Dick's Sporting Goods in like a kind of a cold climate, right? And like up in like northern Illinois, you see North Face like walls, like floor space is like dedicated to like North Face. And if we don't get like a cold enough winter, the directors or of the stores are going to have to like shift gears a little bit to kind of highlight product that the customer is going to need in these specific areas, right? They might not need a North Face, they might need something else. So I think like if engaging with their customers as much as possible is going to be really important, and knowing what the customer wants before they know what they want, if that makes any sense.
Yes,
but that's like, I think that's the key to retail. And that goes back to
management and leadership as well. So is going to be a really important focus. I will say a great transition to our next story, because I would make the argument that the next company we're going to talk about, Walmart, has been doing that very well. Walmart shares surged over 9% to reach an all-time high on Thursday after the company reported solid third quarter results. Another good quarter for Walmart. The company posted $123.18 billion in revenue and adjusted earnings per share of $1. Earnings were ahead of our consensus estimate of 97 cents and up about 2% year over year. Revenues beat our consensus estimate of $121.1 billion and advanced 4.2% year over year. So the Arkansas-based company grew its online sales by 50% in the third quarter. This is one of the things from the report everybody was talking about, Walmart's e-commerce growth. We've talked about it on the show before. We will remember that the company added to its online business last year when it purchased Jet.com. And then afterwards kind of went on a spending spree related to e-commerce, scooped up the predominantly online men's and women's clothing companies, Bonobos and ModCloth.
And more, but those are like the biggest two.
The most recognizable of the names out there. Ramped up its own Walmart.com site. It's been improving its online groceries business. It actually hopes to double the number of curbside grocery pickup locations to 2,000 by next year. So everyone talking about the e-commerce.
Yeah. And one thing to note, one thing I actually want to try is buying groceries through Jet.com. Is one thing they rolled out a few months ago is kind of like how Amazon has like their grocery segment. That's what they're trying to implement through Jet.com. Rolling out their private label brands, but that's just like Equate, which is like does not have the same appeal as a 365 or any like it's Equate, but it's good prices. So
yeah, that's all that matters.
It's kind of really all that matters.
We're talking about Walmart
for the majority of Walmart customers.
We know what we're getting into with Walmart.
Sure, good prices, low prices.
Yeah, exactly.
But I think what might be surprising to some is that Walmart's in-store sales really helped it outperform this quarter. So U.S. same-store sales rose for the 13th consecutive quarter and were up 2.7%. And this is pretty important because 2.7% for a store the size of a Walmart is pretty impressive.
Very true.
And Walmart also delivered its biggest year-over-year sales growth at established domestic stores in over 8 years. And Walmart brand comparable store sales also rose, and this was fueled in large part by increased food sales. And I'm wondering if this was any pushback from the Amazon Whole Foods deal, potentially. And I know Whole Foods are not in the same, most Whole Foods stores are not in the same markets as Walmart stores, but deal close at the same time. I'm just saying.
That's an interesting point.
Walmart noted that food sales had their best quarter in almost 6 years, and Walmart expects both U.S. comps, excluding fuel, and Sam's Club comps, also excluding fuel, to increase in a range of 1.5 to 2% for the 13-week period ending January 26, 2018. And the company raised its bottom line view for fiscal 2018 and now envisions adjusted earnings in the range of $4.38 to $4.46 per share, as compared with the prior expectation of $4.30 to $4.40. So Walmart, another just like
a beat and a raise.
Crushed it.
Yeah, beat and a raise.
They really crushed it.
That's what we like to see in earnings season. I will say a quick couple things to note that 1.5 to 2% comps growth for the upcoming quarter, solid and a nice outlook, although definitely worth noting again that it is a 13-week quarter this year around. So that's interesting. I will say also to go back to this food sales, because I really feel like to me that's the most surprising story to emerge from this, is that it's Walmart's old school in-store grocery business that has been doing well this quarter. The hurricanes in Florida and Texas causing people to have to go to a big supermarket like Walmart and stock up on stuff in preparation for those hurricanes seem like while so many other retailers were having issues with hurricanes, costs related to lost business during hurricanes, seems like Walmart might have been one that could have even benefited from the hurricanes. And even more on top of that, the sheer size and like the structural capabilities of a Walmart building means that it isn't the smaller types of retail stores that were going to be actually damaged by the storms, or that had to like literally not operate for a few days because there was flooding or whatever, which was an issue that we saw for companies that have a lot of stores in Florida and Texas, is that they literally couldn't come to work for 3 or 4 days.
Sure. And kind of going back to your point about benefiting from hurricanes, we saw that with Home Depot.
True. Yeah. Repair costs going to,
they have a good amount of locations in Puerto Rico, and then, all the locations around Houston and other hurricane affected areas. So
yeah, that's a great point as well. And Home Depot and Walmart are always, they're at that level with what they do, where they're the top dogs. That it's a pretty good bellwether for just like overall strength of the domestic economy. So it's a good sign, I would think, that Walmart is performing so well this year, and really taking it to Amazon in that ongoing war, which we've covered extensively. I would say if you want to hear more about it, we did a whole episode specifically related to all of the recent moves that Walmart and Amazon have done to kind of try to best each other. It's a punch for punch championship fight right now, but one to keep your eye on as we go forward. I think that just about does it for us this week, though. As a reminder, everyone, if you feel that we missed something, or if you want us to cover a different story, feel free to shoot us an email at podcast@zax.com. Check out all of our other exclusive audio content at zax.com/podcasts. Remember to subscribe and leave us a rating on Apple Podcasts if you enjoyed the show. Thanks again for joining us, and we will see you next time on the Zax Friday Finish Line.